I believe next week is the last week of that. We have a great meeting this morning. We have a couple different special guests. We have Amerine from Keller Mortgage. We have Justin Stoddart from Old Republic. We have a lot of good content for today. Tomorrow, we have a CE credit class that is going to be a mid-year housing market update with one of the experts, Noah. What's Noah's last name, Melanie?
Noah Blanton.
From WFG Title, and he is knows a ton about the economy. He presented for us a couple months ago, maybe in like the heart of COVID, to just give us an update on what is going on in the housing market and the economy. But it'll be great to get another update now that things have continued to change. So that should be a great CE class tomorrow if people are wanting to join that. And Melanie will send out the details for that.
Yep, you'll want to register. So I'll be sending out that email shortly. So go ahead and click on the link and register for it. Yeah, you don't want to miss it. It's going to be great. He's really going to be going over what to expect for the remainder of the year. You know, the hidden risk behind the low interest rates, just lots of really great information. So highly recommend.
Thanks, Melanie. And then Friday, we appreciate all of you guys and your hard work. So we wanted to bring in Randy Lundberg, the photographer who had come in once before, and offer some complimentary headshots to you guys. So she has, there's available time slots between 9 and 11. There is a link in the email that I sent out or on the Facebook page to register for a time. We do want people to sign up for times just because of COVID. We don't want people waiting in line. So they're just small 5-minute time slots. And, you know, have a cup of coffee here. We'll bring in some donuts. But if you need a refresh on your headshot, it's a great time to do it. But there is limited space. So if you're interested, make sure you sign up for a time slot. Austin, next slide, please. Yes, oh, there's what we were talking about, our complimentary headshots. So we are excited about that. It's always good to freshen those up. We are still doing free lead summer. So hopefully you guys are taking advantage of that, since unfortunately summer's nearing its end in a few weeks. So keep that up. Again, all you have to do is do a social media campaign through Command and just screenshot it, and Heather will reimburse you $20. So, you know, that's a pretty good deal there. Austin, we lost the screen share. Did you know that? Oh, okay. Next up, Mega Camp. So some of you guys have already signed up for Mega Camp, which is pretty cool. But Mega Camp is going to be different this year, right? Normally, it's a big gathering of Keller Williams agents from across the world, but in our world right now, it's going to be a digital experience. And they've invested a lot of money in doing a digital platform that isn't just like Zoom. So let's watch this little video that tells us about what's going to happen at Mega Camp.
All right, let's get going.
Thanks, Austin. Let's go to the next slide. So I know sometimes the videos can be a little rah-rah, but it's cool because it shows basically what's going to, you know, there's going to be panelists, there's going to be, you know, and you can decide which breakouts and groups you go to. So tickets are $119. If you have questions, reach out to Melanie or Austin, but this is a little quick, rough agenda, and there'll be a more detailed agenda as we get a little bit closer. But the day before, you're going to complete your profile on the platform and then look at all the different breakout sessions. So you're going to decide what you want to go to, what's relevant to your business, you know, and they're on everything, right?
Right.
So,
and remember, the breakout sessions are being conducted. They're masterminds by the top people in Keller Williams in every category, whether it's luxury, whether it's commercial, whether it's social media, whether it's mastering command. There'll be dozens of breakouts, and there'll be specific items related to real estate taught by the top people in the company.
yeah, so you'll definitely learn something. And then the night before Mega Camp starts, there'll be, you know, a little welcome party. And then there's also going to be, you know, typically you would go visit some of our vendors in an exhibit hall. There's going to be a virtual exhibit hall. You know, we'll all see what that looks like. Okay, next one, Austin, please. And then day one is Gary's vision speech. And this should be available even if you don't pay for a ticket to Mega Camp, because it's important for everyone to see. You know, Gary Keller is our co-founder and the CEO of Keller Williams International. So his vision for the company is always great to hear, where we're going to go. Our industry is changing so much. Everything's been changing so much. So that should be a great thing to watch for everyone. We're going to play it in the office, in the big training room. So if you want to stop in and, you know, stay 6 feet apart, or watch that from your own computer, that's going to be great. And then there's tons of guest speakers, interviews. And then again, on day 2, you get to choose your different breakouts. And then Josh Team, he's our president. His keynote, he'll probably talk a lot about our technology, and what's coming in the future then. But again, you get to kind of customize your day to go to the breakout sessions that you like. And then day 3, the last day, is a cultural summit with Mo. She, you know, is going to talk about our KW culture is what kind of makes us. So, you know, looking at that at the highest level of Keller Williams. And then setting yourself up for success, right? You learn all these things, but then how do you turn those into action items for your business and to set your business up for the rest of the year? So again, it's the 15th through the 17th, but really the 15th and the 16th are the beef days. You can click on megacamp.kw.com for more information or to register, or you can also reach out to Melanie or Austin if you have any questions. Does anybody have any questions right out of the gate on Mega Camp, or if anyone wants to share an experience also, feel free. All right. Well, hopefully lots of us choose to attend just to set up the business for the rest of the year. So now let's hear from Chantel, because she has a ton of new agents in her program, and some of her agents that have been in her productivity coaching program for a while are doing amazing things. So I think it's really important to recognize what's going on with all of that. Chantel, take it away.
Okay, I think there's a couple slides. There we go. So this is we're a little, hang on a second. These are our new agents. We have Bradley King, Skylar Brown, Nick Louie, Jeff Brown, Josh Sanders, Magda Valdiviso, I think I said that right, or at least close anyway. Sophie Mays Kuhn, Carrie Kapp, who's actually been with us for about a year, Caitlin McCarthy, Matt Hammond, and Lester, and I actually stuck his name together accidentally, and I don't know how to say his last name. So.
Shelagowski. Yes, they're Lester.
So these are our new agents. Welcome, you guys.
Yay. Yeah, all of these agents are new to the business, but a lot of them have come from other careers, different things. So, you know, we're very excited for all these agents. And some of them have been with us for a couple months in Chantel's program, but
they're all
warm welcome, all of them.
Bradley has 3 things in escrow right now and already closed 1. So.
Love it.
Special.
Love hearing that.
And then we have one more slide. Should have one more slide. There we go. So in 2020, the new agents have closed $15,905,209,000. I don't know if I said that right. In closed sales. We've had several graduates already: Regina, Kelly, Nicole, Jonna, Robert, Connie, and HQ. And I know I've said this before, but Connie actually capped twice this year. She capped 6 weeks into her second year. So Robert's they're all super busy at this point. Robert's super busy. Jana's really busy. HQ works another full-time job, and he closes a lot of deals. All of them are doing really good. So.
That's so exciting. So all of those agents went through Chantel's program and are now cappers and beyond, and up and running. So good job, everyone.
2020 people.
Yes. Awesome. All right. So now, thank you, Chantel, for acknowledging all that. Let's get to our first special guest. Robin has an update on KWPP Cares. We've almost doubled our participation. So thank you, Robin, for pushing everyone. Do you want to talk about that for a quick minute?
Sure. Anyway, yes, I want to thank everyone. In the last month or so, we have doubled our participation. We're still needing more, guys. And as you know, KWPP Cares is here to support the associates, employees, and family in times of extreme hardship and sudden emergency. And I am sure there's some out there that are having some difficulties. Please reach out to us and to Heather about that. I know that things are getting, kind of hard these days with the COVID here in a midst. So yeah, so there we go for now. And I'll be reaching out some more to see for you guys. I will send out another one of our forms because I know a lot of people probably get 50 emails a day or 100, who knows. And thank you very much again.
Thanks, Robin. We appreciate all the work you do for KWPP Cares. All right, so we have a special guest here today, Carl from Keller Mortgage. So thank you for being with us, Carl. And we would love to just hear a little bit about what Keller Mortgage is doing, but also what is going on in the world of lending. What are the updates and what are the things that we should know about?
Sure. Yeah. No, thanks. Thanks for having me. We are crazy busy over here. Thanks to all the wonderful opportunities you guys provide for us. So, we certainly appreciate you guys keeping our heads underwater, if you will. But no, it's a good time to be in the business. It's a great time for people buying. Obviously, we're seeing historically low interest rates. Refi rates are super great as well. Obviously, they got a little bump to them last week with kind of some of the Fannie and Freddie direction there. But I mean, they're up slightly from the historic low purchase rates, but they're still, they're still fantastic where they're at. We're, I guess, just a quick, 101 for anybody that, that doesn't know, kind of what we offer, what we don't. We do conventional loans with as little as 3% down. We do your standard FHA loans. We do VA, USDA. We can do jumbo loans up to $3 million. We don't do land loans. We don't have any type of rehab product. We don't have any down payment assistance programs, and we don't do any commercial lending. Obviously, our incentives, with plastered everywhere, but we waive all lending fees, so no cost from us to your buyers. For origination, processing, underwriting, anything like that. We pay $1,000 towards the closing costs, which helps with, appraisal, credit, escrow fees, things like that. That's same incentives apply for refinances. So, it doesn't have to be somebody that bought a home from you or with KW. It can be anybody that you refer over is eligible for that, for the refinancing options. For the purchase transactions, there does have to be a Keller Williams agent involved, either representing the buyer or it can be your listing. And you can send the buyer to, help keep your seller's equity and save money there. It's, like I said, it's a unique time for us because I can't recall really a time before where we've had such great interest rates that open up refinancing opportunities for people, but also the home buying season being as fantastic as it is too. So it's, usually from a mortgage company's perspective, you're either a heavy hitter, one way or another. The company that we were before we became Keller Mortgage, we were 95% refinances and maybe 5% purchases. And, up until the spring of this year, we were 90% purchases, less than 10% refinances. And then now I think it's like 65-35. So, it's a heavy dose of refinances. We have to be realistic. So just, for what people to give, I guess, to set appropriate expectations for people looking to refinance, I often joke with them like, hey, it's going to be a slow, boring process. We're looking at, 45-ish days to close a refi, simply because we've got to make sure we're allowing enough time for our purchases to take top priority there.
Thank you. Will you elaborate a little bit more on how we've had historical lows in our interest rates, and then there were some things that changed last week?
Yeah. So, this whole year has been kind of a yo-yo. I mean, we saw rates plummet in the early spring, and it freaked the whole mortgage banking industry out. And I think within like a 2-week span, we saw rates go from under 3% to 4%. Just because nobody was really sure what was going to happen. There was a bunch of liquidity concerns. And then, really we saw kind of the things stabilize back out, and then rates quickly came back down. And now they've slowly just been dropping further and further. And, it's pretty typical right now that you'll see, or even before the Fannie Mae update there, that you would see a purchase rate be slightly better than a refinance rate. I mean, they're not always necessarily the same. But basically what happened last week was that, that FHFA came in and just said, hey, we're going to add a 50 basis points buffer to our refinancing. So it's just basically, the way they explain it on the news release that I saw is they say, that basically would cost you $1,500 in discount points as a consumer on a $300,000 loan. And with a lot of lenders, it's not necessarily, you may not see a $1,500 increase on your end as a buyer, because they're usually just going to build that into the rate. We're going to offer what we call like a par rate. So, hey, here's a rate that's available with no points. And that's just basically now higher than what it was. And they're still crazy low, right? I mean, we're still seeing people refinancing at, close to 3%, right around there all day long, which, in 2018, people were buying homes at over 5%. And that was a great rate at the time. Even last year, 4% all day long. So it's still a great opportunity. It's just not quite as great as it was here for a little bit.
Okay, thank you. And then what about jumbo loans? What's going on with jumbo loans?
So kind of the unique thing about, about jumbo loans is that, they don't really fall under any of the Fannie Mae, Freddie Mac type guidelines. So they're all, everything's going to be very unique with jumbos. Like investor specific or portfolio lender specific, if you will. So, at the current moment, we're not portfolioing any of these jumbo loans on our own books, like holding them. So, we are selling these loans on the secondary market. And, once kind of all this COVID nonsense started, like just kind of destroying some of the lending outlets, it eliminated some of the kind of back end options we had for those jumbo products. So, we do still offer them. It's a pretty black and white of, kind of what we can offer. They bumped up their credit score requirement. They all, it's our jumbo product currently requires a 20% down payment. Credit scores over 700. They've got pretty hefty reserve requirements. But, a lot of the lenders, I guess, kind of across the industry had definitely kind of tightened up their requirements there. For those. So yeah, like I said, we're still offering them. They're just, they're just a little more limitations and stricter than what they were previously.
Okay, thank you. And then speaking of tightening up the requirements, did you want to ask?
Yeah, so you and I spoke a little bit this morning. Would you talk a little bit about the announcement that they made as far as selling mortgage portfolios directly to Fannie Mae? What that means for us, what that means for the future of the company?
Sure. Yeah. And something that we're obviously excited about. I know our capital markets team worked really hard to make that happen. And for them to be able to finalize it during kind of throughout this COVID was really kind of like a miracle, because we were close to having it done before COVID struck, and then they kind of put it on hold, and they really kind of pushed and begged and pleaded to get it finalized. So, really what that means for us is it allows us to, underwrite direct to Fannie Mae guideline. So it basically eliminates the overlays. So we can just go straight off of what Fannie Mae will accept and what they require, which makes it easier for us, easier for your buyer, to kind of get that loan approval at kind of a cleaner, easier scope. Now it's something that we will like ramp up to. I mean, we, just to kind of be somewhat transparent on that, I guess, with what I'm at liberty to speak on, it's not like a flip. We didn't really like flip a switch and say, now everything automatically goes to Fannie Mae, right? I mean, it's going to be a transition, kind of the generic answer I was provided with was, hey, look, we're going to take our super easy A+ vanilla files, and we're going to sell all those direct to Fannie to start, just simply because when you're selling any of these loans on the secondary market or to Fannie or whatever, they audit them for sure. And, the cleaner your files are, the less they audit, the less strict they audit, the fewer of them they audit. And then the messier they get, the more scrutinized you become. And then they start re-underwriting every file, and it becomes costly to the company. So, it'll be one of those things where hopefully soon, really soon, like within, a matter of months, kind of from what I've told, is that they will, because they basically said, hey, you guys will only buy so many loans from you to start, so many millions of dollars. And then once they kind of review that and we get, kind of more established with that selling, then it'll open up more outlets. So it's just, it'll certainly make it cleaner, make it easier. And then the other cool part is it obviously improves the pricing. So, we can kind of cut out some of the, that middleman price that we had to factor in, that, the servicer was charging us to be able to get it to Fannie Mae. So, it may be a slightly lower rate. It may be more credit to the buyers for the same rate, but, all in all, it's amazing news. It's a really good thing that's going to be happening. So like I said, it's not like tomorrow all of our loans go direct and all of the overlays have been eliminated. We certainly have a growing period there and some limitations on it, but we're super excited. It should be an amazing thing for us.
Carl, I have a question. Would you please elaborate on Fannie Mae Direct versus overlays? So when we're out in the field and we're dealing with our various lenders, would you explain what an overlay means to the process?
Yeah, sure. So just generically here, we'll say that, Fannie Mae is going to, when we underwrite a loan, we run it through what's called an automated underwriting system. And for Fannie Mae, that's called desktop underwrite, or we abbreviate it as DU. And DU reads the information we put in the file. It reads the information from the credit report, and it comes back instantaneously with what they call the DU findings. And the DU findings are Fannie Mae's requirements for what it wants in order to be able to buy that loan or secure that loan. So maybe that's 2 months of bank statements, a pay stub, and a W-2. Whereas that would be to sell direct to Fannie. Maybe that's hypothetically all they want. Currently, we're selling a lot on the secondary market, and that's where the overlays come in. So we may be selling a loan, the servicing of the loan to like SunTrust or Wells Fargo or Chase or PennyMac, any of those different investors. And those investors may have more strict guidelines than what Fannie Mae says. So they may say, well, hey, we want 2 years of W-2s. We want 2 years of tax returns. We want tax transcripts from the IRS. It's things like just kind of additional documentation and more information. So the being able to sell direct to Fannie eliminates those, those potential overlays there for additional requirements from their buyers.
Yeah, so we've personally encountered second level reviews and even third level reviews, and where this is really critical to the mortgage process is you would be going directly to Fannie Mae, so there aren't second and third level reviews outside of what Fannie Mae would ask. Yeah,
somewhat, yes. I mean, I guess understand that if you're hearing from your loan officer or from your team or your buyer there, hey, this is going to a second level review or a third level review, those are internal layers of review. So, if it's, for example, like a newer underwriter, we're constantly onboarding new underwriters, and during their, I don't know, however long, right, their loans are always going to go to a second level review. If it's a jumbo loan, for example, those are always going to have second level reviews. Any of our government loans have second level reviews as well. Just is part of one of the things that kind of intensified that or amplified that through COVID was we saw like credit score requirements increase, right? Before we could lend to a 600 credit score on a government, an FHA or a VA loan, and that overnight went to 640. And now that's not like a FHA change or a VA change or a Fannie Mae change per se, but that was kind of a secondary market change there. So, some of those things are the other cause on our end currently for second level reviews and third level reviews there. So part of it is, the growth that we have. We want to make sure that we're selling loans that are sellable to Fannie Mae. And I think you'll still see second level reviews for a while and things like that to happen. But typically those are going to be the most common on, I guess, kind of your unique situations, if you will, if it's maybe self-employed, starting a new job, maybe multiple risk factors to the loan, right? Not super strong credit scores, or maybe they have multiple properties or multiple businesses, just kind of anything that, and again, I'm not an underwriter, so I don't have the complete list of what they look at. I know I constantly see the loans that I personally originate that I see go through second level reviews. And anytime you have, I guess, if you will, multiple factors, they're going to see those multiple reviews. Now, with selling direct to Fannie, I would say we'll probably continue to see that at least for a little bit, because as I mentioned before, we want to make sure when we're initially selling there that we're getting good, clean files. We don't want them being audited and bounced back, because then they get stricter and more kind of thorough on their reviews. So, but yeah, when you're hearing about that second level, third level review, that's just simply the underwriting team. Obviously, their goal is to protect the company before they give that authority to lend the money out. So. But yes, for my own sake and my own sanity and my own time, I certainly hope that with going direct to Fannie that we'll start to see that those decrease quickly.
Great.
Thank you, Carl. Does anyone else have any lending questions for Carl, or about Keller Mortgage, or just lending in general? Cool.
Carl, I have another question, Carl.
Yeah.
This has come up for me. So when you go to the Keller Mortgage website, you're not available. What does that mean?
Yeah, well, so basically it means that I'm pretty fortunate that I've been with the company since they started, and I've built some great relationships with many of the agents out there, to where I'm kind of at a capacity of what I can personally handle. So it's certainly not that I don't want to help everybody. I've got to be realistic of what I can maintain, what I can provide service on. So yeah, I've basically, for the time, I've just asked our leadership to say, hey, gray my name out on there. Part of it, I think, was, like I said, I've been with the company since day one, so I've been here to help nurture and build those relationships from the start. Perhaps kind of coincidentally, though, my last name starts with an A, so I'm at the top of that list. So I think I got selected a lot just because I was the first guy up there. So part of it just being luck of my last name. If I was a Smith, I may not have had that same luxury. But yeah, I mean, we've got a lot of great loan officers. We're constantly bringing new people on. So kind of one of the unique things about growing fast is, bringing lots of people on quick. Sometimes people think it's going to be a great fit for them, and maybe they realize quickly that it's not, and so, if I guess what I'm saying there is if you get tied in with a loan officer and you're not happy with them, or you're not getting the service that you want, we've got ways to get your files reassigned. Make sure we get a good fit. Sometimes it's not necessarily the quality of the loan officer or the agent. Maybe it's a personality clash. Maybe it's a personality clash with your buyer and the loan officer. Maybe they just don't mesh. And we've got plenty of resources to make sure that we're delivering the best service we can to both you guys and to your buyers there. So, there's through the app, you can select kind of all the loan officers that are licensed in your state, and give them a try. I always say you can just kind of pick one and call them and give them a quick 2-minute interview and see if you mesh. There's the SOS button on there where you can kind of reach out to our leadership teams and they'll help find somebody and get assigned. And it's I'm always happy to help if I can. If you say, hey, I got my file over here with Johnny and Johnny's terrible and I need somebody better. If I have the capacity, I'll hop in and help. If I don't, then I'll certainly link you up with somebody that can.
Thank you.
Yes, thank you so much, Carl. We appreciate you being here and giving us the update.
Hey guys, can I say one thing?
Oh yeah.
Hey Carl, it's Chris Burley.
Hey Chris.
Hey, so I've been using Carl pretty much, I think, from day one. And so just something to take note, appraisals are starting to be an issue, not only for value coming in, but for time. And so one of the benefits, along with $1,000 credit, competitive rates, all that good stuff that Carl mentioned, is we're able to order that appraisal day one. And that takes a lot of that timeline, like waiting for the home inspection to be done, which is when you typically order that appraisal. Carl's able to do that day one. And so I've never had an appraisal come in late. I've never had a closing need to be extended with them. It's been super seamless. And so that's one of the selling points to your clients, to let them know that if for some reason the deal falls through during the home inspection timeline, the buyers don't get charged for that appraisal. So it's just kind of one more thing in your pocket to use. And thank you, Carl, for all your hard work.
Yeah, absolutely. Appreciate it.
I'd like to chip in here too. Hi, Carl, it's Peter.
Hey, Peter.
We've been working together since day one on this thing, and Keller Mortgage offers you something. I tell my sellers, it says that you can sleep at night if we use Keller Mortgage, because within a matter of 3 to 5 days, generally speaking, we'll have only two contingencies, as Chris pointed out, that are outside of our control. The financing contingency and the appraisal taken care of way up front. So the only thing you have left to negotiate is the inspection contingencies, and life has gotten much easier. Thank you, Carl.
Appreciate it.
Awesome. Thank you, Carl, for being here. We appreciate it. And if you have any questions for our mortgage, you can reach out to Carl or any of the Keller Mortgage people.
Definitely. Thanks, guys.
Thanks, Carl.
So now we have our next guest, our wonderful friend, Justin Stoddart from Old Republic, but also the Think Bigger podcast. So thanks for being here.
Yeah. Hey, everybody. Good morning. Thanks for the opportunity.
Of course. Yeah, so last week, Justin had a mastermind on listings with some agents, and, he's out and about talking to lots of different agents. And we'd asked Justin to come on because I wanted to see what kind of came out of that mastermind. And as we get into finishing up third quarter and going into fourth quarter, we are going to have to just really focus on listings, right? Because our listings are a little bit down this last month, but a lot of that has to do with the cycle. So hopefully we can just keep the momentum going and, keep our business going. So Justin, take it away.
Awesome. Thank you, Corinne. Excited to share with you guys some things. So this morning on my podcast, I actually interviewed Randy Sebastian, president of Renaissance Homes, and he confirmed some of what we all know is that right now people are moving, whether it's simply they're just upgrading their space, kind of move, like they're changing their space. And obviously that's due to a number of different things. People now are realizing again that they're going to be homeschooling. Kids are going to be home. People are realizing that they're going to need to be working from home somewhat, and potentially one, maybe two people working from home. And the home has taken such a greater focal point in people's lives that people are really looking to get it right. And so he confirmed that, and his take was that the market's going to be really strong here in the Portland market for a period of time. And he said a couple things are that he's seen in that is that there are things happening in Portland that we all probably see on different news stations that are causing people to be concerned about living in at least the downtown area. There's other things with Portland in general that people love, like they love what Portland stands for. They're moving here. And so he said, regardless of what side of the spectrum, if any, you stand on, he said, the reality is we get paid when people move. And if we can not buy in emotionally to people's reasons for it, but just stand ready to serve and be available to help people with their needs, there's going to be lots of opportunity for long periods of time, because some people are moving out, some people are moving in, and there's, at the end of the day, there's a supply shortage that's not going away anytime soon. And so with that being said, I think that just kind of reinforced probably what all of us are feeling is that people want to move, people want to change their space to where so that it fits the new reality, right? The new lifestyle that that we've all been, asked to live now. And so a couple of things that we talked about on our mastermind, some things that came out is that whether or not you're hearing it, your friends, your family, your neighbors, your community, people are thinking about real estate because again, the home has taken such a greater focal point than ever before. People at minimum want to do some upgrades to their home, right? At minimum or at maximum, like they want to sell and move out of the area, right? That like in anywhere in between. And so how do we be sure that when those conversations are happening, that we are in the middle of them, that we are their trusted resource. We're the ones that they're going to, we're the ones that they're thinking of and can reach out to us, whether it's, do you know a good contractor, or we're thinking about listing our house. And some of the things that was interesting as we polled everybody that was on the mastermind, we asked them, we said, who of your most recent listings, where did they come from? And everybody on the call was like, they came from my sphere. They came from people that I knew. Now, not if you look back further, like a year back, that wasn't the case from all their listings, but the most recent ones had come as a result of people that they knew. So maybe you could make some correlations here that when in times of uncertainty, people go back to people that they know, people go back to people that they trust. And I think that there's a pretty valid case for that. I think that there's lots of opportunity within each and every one of our spheres to generate more listing business. One thing that stood out is that I asked those same participants at our meeting, how many of them proactively reached out within their sphere to generate those listings. And all of them were like, I didn't do much to do it. Those ones just kind of fell in my lap. I just kind of stumbled across that one. Yet everybody agreed that if I was more proactive in communicating with my sphere, that I would have more of those, that there's no doubt I would have more listings, because those ones are just kind of falling into my lap. What if I were actually proactive? And so then we got into this component of, what's keeping you? What's keeping you from being in contact with your sphere and identifying what their concerns are? And the biggest thing that I've found both in that environment as well as I've interviewed other people is they just don't want to come across as salespeople or salesy to their friends. They want those friendships to be genuine. They want it to be authentic. They don't want it to feel like you're trying to turn a friendship into a commission check. And so as we got kind of to the bottom of that, I revisited something that I had learned and shared with you in a previous setting that I think is valuable for everybody to recognize. And it comes from the book Ninja Selling, which is one of the classic really tutorials on how to be a great relationship-based real estate agent. And it talks about having a certain number of live interviews every week. A live interview isn't like you see me do on my podcast. A live interview is a conversation with somebody to see how they're doing in their life. And they use the analogy or the acronym of FORD, right? F stands for family. How's your family doing? I would say more than any other time in the history of my life anyway, that we have a really valid reason to ask, how's your family? Are they doing okay? Is everybody healthy, right? The next letter is O in this acronym, right? F stands for family, O stands for occupation. How's your job? Have you been impacted by this? How's COVID impacted you? I know the real estate market's crazy busy right now. I know not all industries are that way. Tell me what's happening. That's a supernatural way to just check in on people, right? This isn't some crafty way to make a sales call. This is you genuinely reaching out to care for people. The R stands for recreation. Boy, I would imagine like you, maybe you had some vacations or some summer plans canceled. How have you guys adapted? Kind of what's on the radar for you? How have you been able to break out of your cabin fever, right? Another great talking point. And then D is dreams and goals. And I know all of us had kind of a thought pattern as to what we thought 2020 would look like. It's looked very different. Kind of what are your plans? What are your dreams moving forward? Like what are your goals moving forward? What are you hoping to see happen in 2021 for you and your business? Again, that's following that acronym FORD: family, occupation, recreation, dreams. And the rule is you can't talk about real estate unless they bring it up. These are simply, you're genuinely asking these questions so that you can identify if there's some other need outside of real estate where you might be able to serve them. Then
I love that, Justin, just how you come from that place of serving and how you brought up this really, really good point of reaching out to people in your sphere that maybe a month ago had no interest in real estate, but so many things have changed. And when you reach out, having that truly genuine conversation. So many good things so far. I'll let you keep going.
So I hope everybody's realizing that your people right now, your sphere, they actually want you to call them. They actually have these questions and they're going to go somewhere. Someone's going to answer the questions. It's either going to be they're going to Google it. They're going to talk to somebody else who talks to them. Like they have questions right now that need to be answered. And you happen to know a lot more than you think you know. And by simply positioning yourself as a resource to help them in all things. Could be with their job, like positioning positioning yourself as a fact that I happen to know a lot of people, and if your job is affected, maybe there's an introduction that I could make. And if you genuinely think about making calls with that in mind, my guess is the fear is going to drop, and you're not going to be afraid that this isn't a sales call. You're genuinely looking to connect people to opportunity, connect people to solutions to their real problems. And in there, some of that problem may be real estate. The reality is when a real estate need comes up, you get paid really well to help them solve that. And the calling card through which you get to those conversations is by genuinely caring about all these other topics. And in the meantime, all those other topics turn into great intelligence for you, great data and insights from you to be able to say, they lost their job. I think here in the next little bit, they're going to need to sell that house. I don't think that industry is coming back. I'm going to stay in closer contact with them because I think they're going to need me as a real estate agent, right? You don't necessarily come out and say that, but now all of a sudden of your 250 to 300 people in your database that you're trying to take care of and love on, there's 3, 4, 5, 10 of them who you're staying in a little bit closer contact because you know they're going to need you. I'd love to hear any thoughts. Has anybody had similar experiences? Can anybody validate kind of the things that I'm saying, that your people really do have needs, really do have concerns, and that it's actually not salesy at all to be calling and asking and how you can help?
Yeah, hi, Justin. It's Robin. So one of the things, and I do that because I'm my senior specialist here in Summerfield, and we're all seniors. I have a sheet that I give out that has services and places to donate. It's about 20 different places, like junket store, that kind of thing. And that's for everybody. And people are going through their homes right now and decluttering and, that kind of thing. And that to them, they just love that. So I always mention that if I'm talking to them, like you said, on this Ford acronym. Yeah, so that's what comes up. We're just clearing out things like, oh, great, I've got this great list for you. And so now I'm, giving that to them, and I'm on top of mind.
What a great idea. Yeah, there's a lot of
I can share that with anybody who wants that, of course.
Awesome. Thank you, Robin. Anybody else? What's working because again, these conversations are happening. They're going to lead to listings. Somebody's going to get these dang listings. If they've forgotten about you, it won't be you. So what are you doing right now to get over that fear of being salesy to your friends? What's working for you? What has worked for you in the past?
Hey, Justin. We've been trying to keep our clients updated on what the interest rates are doing. And so we've been sending out, Keller mortgage information about no fees and $1,000 back. And we had a client lock in. I think they're closing at the end of this week at 2 3/4. I think Linda Heinrich said that she had some clients that were locked in to refinance at 2 5/8. And so, you're coming from contribution if you can send things out like that so people know what their options are. So one of my clients called me and said, hey, thank you. We're gonna go ahead and refinance, and we're gonna combine some loans and hunker down for this next winter. And so they were talking about combining some into their home mortgage. They could pay off their original mortgage, a small second, and a car loan, and then they would be debt free, and their payments would be less than what they have right now. So low interest rates tend to take care of a lot of issues that people have. So it's really important to keep your client base up to date on what's happening with mortgage rates.
Great idea, Joy. Yeah, people are wondering, what does that mean for them when they see rates, right? You hear it all over the news. Again, people are not living in a bubble. They're seeing what's happening out there. And they're looking for an expert that they can trust. Awesome. Anybody else have any idea?
Providing that value for refinances, even though at the exact moment it might not benefit you, right? But just doing that good thing and sharing that information.
Awesome. Anybody else have any thoughts on that? How to cut through that fear that's stopping you from being in contact with these people? Other ideas?
We're a dead group. What did you come up with in your masterminds, Justin?
So it's kind of what we talked about. Those 4 questions is kind of the best. Everybody agreed, and those that I've spoken with have found that. So I want you to think about that. That Ford acronym is a great way. You don't have to do all 4 of them. You can choose one of them and say, I'm going to go and I'm going to call about, hey, how's this affected your profession, right? How has this impacted you? Just choose one. If that's easy for you, easier, and just call and say, I've been thinking about you, or text them, Facebook message them, right? Whatever. Don't let the default be nothing, right? Let the default be something. I want to share one other thing here really quick that has, for those of you that have geographic farms, I know not all of your business has to come from your sphere. I think in this time, that's probably the fastest way you'll get it. But I interviewed somebody on my show who's actually a real estate agent out of Arizona. And he said, every time I send out these postcards, the phone rings. And I want to share them with you because I think they're really insightful as to a different way to think about marketing for those of you who have farms. All these files are kept in my Facebook group, which is Think Bigger Real Estate. That's the name of my podcast for those that don't know. Go if you'll it's a closed group, but if you go and apply to get in, I'll let you in. But inside of here, there's a place called Files where I keep kind of nuggets of gold that I get from the guests that the guests give me. A couple of the things here is a gentleman by the name of Kevin Owens, these postcards, Final 38th postcard, this Apple postcard, Just Sold postcard. These are postcards that he sends out that he's getting a lot of response from. So this is, again, another way to get listings. I think all of us know kind of the typical way: go to Bear Printing, go to Core Fact, right, and send out these postcards. If you're like me, when I open my mailbox, I open it, or when I open my mail, I do it over the recycle bin, and I quickly go through stuff. And if it looks like a solicitation, I don't even stop and read it, right? Whereas if it catches my attention and it tells an interesting story, then I stop and potentially read it, right? So I'm going to open up a couple of these here and show you kind of what he's done. So this postcard, okay, keep in mind this is in Arizona, so they got amazing sunsets there. I don't know if this was photoshopped or not. It very well may have been. But if you look at the very picture on the front, right, it's not a picture of him standing in front of all of his real estate awards, right? This is a home in a gorgeous setting, just /sold by Kevin Owens in Whitehorse, okay? Here's the other part that I want you to look at. How did Kevin set this record-breaking sale? Okay, so it asks the question. Now here's the story. So he's taken all of his online accolades and putting them on the postcard. So 4,400 online video views, 23,000 online views by active buyers. This is stuff that Keller Williams is helping you guys do, right? The amount of exposure that your listings have just by being a part of Keller, you could put these things inside your postcard, hosted an invite-only unveiling event. Okay, so you probably can't do that right now, in this environment. But he's telling the tale. Again, these are stories that are happening just because the market's strong to some degree, right? Sold in just 2 weeks with multiple offers. You guys have these stories, okay? But he's also bringing in some of these online accolades here, telling the story of why he's selling better than other agents. Okay, then thinking of selling. See how Kevin's marketing can get your property sold for top dollar. Okay, so he's got a nice call to action there. So anyway, I put this in here because, again, some people are having great success with their postcards when they do it right. So feel free to look through here inside the group. Again, you'll see a number of different examples, and I'm happy to help you. As a title company, for those that don't know, I work with Old Republic Title. I guess you said that, Kareen. We have access to massive amounts of data. We can pull data that's based on people who haven't sold or refinanced and would have a certain amount of equity in their home, right? You can target people by that. You can target people who, are out of state, right? Landlord laws in Portland and Oregon in general, some would argue, have not been very friendly to landlords. And so there may be people that are out of state owners who are renting that may want to be selling. There's all kinds of things you can do. I would encourage you that if you're interested in getting listings from a geographic farm, let's talk. We have robust tools when it comes to finding data so you can really have a targeted message. And then I can help you. I really geek out on the marketing side of things. What makes people stop, read, and engage? So please utilize me for that. So those are a couple of things, kind of a couple of key takeaways from the mastermind. Any other thoughts or questions or follow up to that?
Thank you for sharing that postcard. I love that with the, they're just showing what differentiates themselves right there on the postcard. So, I mean, he said it, he gets lots of calls off of it and a very clear call to action. So, I know a lot of us, you know, our agents have sent out postcards and crickets. So, about really looking at what is going to make that marketing money worth it.
So Cricket and I do this, you know, 8 times a year now, the kind of a postcard. But I remember a few years ago when I was a solo, now Cricket, but that I did one similar and then also did my stats. And that year I put down and I had all my listings, I had no price reductions. And I'll tell you what, I got calls and they were just people saying things like, oh my gosh, that was unheard of. But I went back looking and so we were looking over my stats and I went, oh my goodness. And that whoever that was, I think it was Mindy is the one that said, Robin, you need to tell people that. I go, okay, great. But those are the kinds of things, yes, Justin is saying too, that I mean, we need to do to let people know.
Yes, what differentiates you? Love that, Robin. Thank you so much, Justin, for joining us. We always appreciate your words of wisdom. And if you need any help with the list, like Justin said, reach out to him. I posted his contact information in the chat. And yes, we appreciate it. So thank you, everyone. Have a wonderful rest of your day. And hopefully we see you on the CE class tomorrow.
Bye, everybody.
Thank you, Justin.
Thank you, Justin.
You bet. Thank you all.
Bye.